Many investors have come in and told us that they're afraid of when the Fed will begin easing its stimulus program in the not-so-distant future. Our next guest is here to say there will be plenty more rounds of stimulus to come. How about another 96 rounds? On the phone with us out of Thailand is Marc Faber, the editor and publisher of the Gloom, Boom, and Doom report. It's always good to talk to Dr. Faber. So you don't think the Fed is finished yet, or?
No, I don't think so, because I see several possible scenarios. Either the economy next year is still relatively weak, and don't forget, the jobs report on the surface was very good, but if you analyze the details, the majority of jobs gained were part-time jobs,
right,
and job losses were in the manufacturing sector and in full-time jobs. So I think it's a very mixed picture. Secondly, the Fed announced kind of a possible tapering at some point. Thereafter, the bond market tanked, and the stock market also eased. I think the Fed would like to see the stock market going down somewhat so they can go public and say, look, we need to ease more, otherwise asset markets will decline and we have again a problem.
Right.
So the thinking at the Fed is, regardless, they are in a bad position, but they will argue it's better to print than not to print.
Okay, so let's talk about what type of assets you would want to own in that environment if you're right, if this does continue for some time. You talked about stocks and bonds. What about gold? We were showing at the bottom of the screen while you were speaking the fact that you'd rather own bonds or gold than own stocks in this environment. I was reading before we came on the air an interview that the website Business Insider did with Jim Rogers, who was saying that he wouldn't be buying gold now, thinking it's in the midst of making what he called a complicated bottom. He's got more to go to the downside. We're showing it at over 1,200. Jim figures it'll end up somewhere between 900 and 1,000. How do you see gold?
Well, he may know more than I do, and it is possible that it drops further. It is also possible that, given the incredible bearish sentiment that exists about the outlook for gold prices, and given the fact that gold has already declined by almost 40%, and also given the money printing that we have around the world, that gold is making lows right now. Who knows? But my sense is that we never know exactly which is the high and which is the low. That's why there are more poor people than rich people. Otherwise, everybody would buy at the low and sell at the high the same day.
So are you just hanging on to gold, or are you actually, would that be something that you would say, all right, let me add to my gold holdings right now?
I am holding gold, and I will never sell my gold, and I'm buying more on this weakness.
Okay. You think it's going up from here, 1,200?
Well, I think it's an asset that is not the liability of somebody else.
Right.
I feel deeply uncomfortable to hold cash with banks, and I think that we are in an environment where financial assets are going to come under a lot of pressure at some point.
Right.
Now, will that some point be with Dow Jones 20,000 or 15,000 or 30,000? Who knows? But all I know is that the financial sector is disproportionately large to the global economy,
right,
and that there will be a massive deflation in financial assets.
At some point. 15.2 on the Dow right now, as you see on your screen. Marc Faber, it's always interesting to talk to you, and we'll have you back soon, I hope. So have a good day.
Well, thank you so much.